If you're a sole trader in the UK, you've probably heard about National Insurance Contributions, or NI for short. It's crucial you understand what it is so you know when you should pay it and when you shouldn't. My name is Jack Rivas and welcome back to our channel, where in today's video I'm going to explain what NI contributions are, how they work and when you need to pay them. Let's start with the basics. National insurance is a tax that funds state benefits like your NHS and state pension. As a sole trader, there are two types of national insurance you'll likely encounter: Class 2 and Class 4. First up is Class 2 NI. This is paid at a flat weekly rate of £3.45. Class 2 NI will be changing from the 6th of April 2024, but here is what you can expect to see on your 2024 tax return. If your profits are lower than the small profits threshold of £6,725, you don't have to pay any Class 2 NI, but you may choose to pay voluntary Class 2 contributions. These contributions are important if you don't yet have 35 years of qualifying contributions, as this is what you need to receive a full state pension. You can check how many qualifying years you already have on your government gateway account. These contributions also help you qualify for benefits like the maternity allowance. If your profits are between the small profits threshold and the lower profits limit of £12,570, your Class 2 national insurance contributions are treated as paid. What this means is that you receive a qualifying year to your national insurance record, but you don't have to physically pay Class 2 NI. Lastly, if your profits are more than the lower profits limit in the 2024 tax year, then you have to pay Class 2 NI contributions. If you worked for the whole tax year, you can expect to pay £179.40. The only difference from the 6th of April 2024 is that if your profits are more than the lower profits limit, then your Class 2 NI contributions are still classed as paid and you no longer have to pay them. This means that Class 2 is only paid on a voluntary basis. You will see this change from your 2025 tax return. Now on to Class 4 NI, which you'll be glad to hear is a bit less confusing. Class 4 NI is based on a percentage of your profits rather than being a flat rate. You'll only start paying Class 4 NI above the lower profits limit. On your 2024 tax return, you would pay 9% on profits between the lower profits threshold and the upper profits limit of £50,270. However, on your 2025 tax return, you will pay 6%. For any profits above the upper profits limit, Class 4 NI is paid at 2%. Now let's do an example. If your profits were £40,000 in the 2024 tax year, you'd have to pay Class 2 NI as your profits are above the lower profits limit. To calculate your Class 4 contributions, you would need to deduct the lower profits limit from your profit, which leaves £27,430. 9% of this is £2,468.70. In this example, your total national insurance payable would be £2,648.10. In comparison, if you earned £40,000 profit in the 2025 tax year, you wouldn't need to pay Class 2 NI, as it would be deemed as paid. You'd also only pay Class 4 at 6% of your profits over the lower profit limit, making your total national insurance payable £1,645.80. That's quite a difference. Both Class 2 and Class 4 contributions are calculated and paid through your yearly tax return unless you pay voluntary contributions. These can be made through your government gateway account. Remember that national insurance is paid in addition to paying income tax. However, unlike income tax, paying your national insurance isn't just a legal obligation, it's also your gateway to important benefits like the state pension. Staying on top of your contributions now ensures you're covered for the future. If you found this video helpful, hit the like button and subscribe to our channel for more tips on managing your finances as a sole trader. Thanks for watching, and I'll see you in the next video.